Yeah. Can you hear me?
Ricardo, you can hear me, right?
Yes.
Yeah, I just tested it.
Yes. Turn on your camera because I can.
No, I don't want to. Later, I'm going to turn on my camera. Can you hear the coffee music?
Yes.
Okay, I just put it.
Yes, good morning, RGB. This is Christopher, IRS Certified Acceptance Agent, tax professional, and a business owner. How are you guys doing today? Today, we will start our more tax deductions on COVID-19 situation. These are specifically intended for business owners and entrepreneurs that are needing to file their taxes on or before July 15. This is our week 1. This is the series 1. And all of this are provided free for everyone that are going to listen to our presentation. Hopefully this will add value, specifically at this point in time that we are getting so much COVID-19 business relief. Tax regulations and guidelines are associated with the CARES Act or the Coronavirus Aid Relief Economic Security Act. They are all related to the IRS guidelines. All right, so what we're going to talk about are the different business entities, structures, how are they affected, especially on all the PPP application. We encountered so many rejections and denials because they are submitting the wrong forms because of their business structure. All right, so these are our success stories. Just follow us on Facebook and on our website. Also on Google, we have processed so many applications already together with their tax, bookkeeping, and payroll services. So far, we have processed more than $200,000 PPP together with the EIDL applications. 93% were approved and 7% is pending because we will be your right hand. All the documents that are needed will be based on your tax returns, with your profit and loss statement or balance sheet cash flow together with your payroll reports like 941 and 940. In other words, we will be your right hand. For those of you that will miss this presentation, you don't have to worry. Why? Because we are on YouTube. Just follow us on our channel, subscribe, type WICO Tax, and you will be able to watch our past presentations together with this one for free. And if you want to read and download the free PDF tax, payroll, and bookkeeping checklist, go to our website because it's only less than a month from now before tax season begins. It's going to be on July 15. That is the reason why we are giving you so many tips and tricks on how you could lower your taxes and how you would be able to facilitate any type of grants or applications. And at the end of the series, I'm telling you, like, what we do know will be our greatest asset, but what you guys do not know may be your greatest liability, but what other people know can be your greatest resources. You just have to spend time. Okay, now on those 15 participants that will be completing, we will give you a tax workshop certificate once you completed the tax series. And also, this 15 participants will receive at least a free 1-hour tax payroll bookkeeping strategy. Our upcoming events, please join me tomorrow on our Thursday live chat, 10 in the morning, on how to access the 48 million Texas business funds. 10 a.m. I will be co-hosted by no other than Dr. Barbara Hinojosa. She helped me to obtain or to secure more than $10,000 last year for the development and training funds for my employees. And next week, we will cover week 2, next Wednesday webinar, the 10 most common taxable income. We offer this presentation on English at 10 in the morning and Spanish at 11 a.m. This is our YouTube channel. Just type WICO Tax and then click subscribe. Then if you have any more questions with your COVID-19 relief, if there are still pending about this application, at this point, we are processing COVID-19, the PPP forgiveness. So you can download free tax and bookkeeping checklist, go to our website, or you can even call us today. Disclaimer that this material has been prepared for informational purposes only. It is not intended to provide and should not be relied on for legal, tax, or accounting advice. That WICO Tax is a local and an outsourced tax, payroll, and bookkeeping company. WICO Tax is not associated with any institutions on this presentation, and it is a private business providing resources for small businesses. How businesses or how business entities affect taxes and PPP application. We will cover the following. So these are the first week, the how business structure affects your taxes and PPP application. On June 24, 10 most common taxable income. July 1, the ultimate list of small business deductions. July 8, what are the new rules for tax filing guidelines for 2020? July 15, how paying yourself cut taxes and affects PPP forgiveness. It's offered, it will be offered in English and also Spanish with our accountant, in-house accountant. We will cover today that the company's tax breaks change depending on its business structure. Each entities have different tax filing requirements and payroll report documents, especially for the Paycheck Protection Program Application. The following topics that will be covered, our agenda will be what's the difference of the DBA versus sole proprietor, what are the three tax treatments of unlimited liability company, and the biggest mistake of running your business. So far here in United States, there are 5 most common business entities. They are the sole proprietor, partnership, limited liability company, S corporation, and C corporation. How are they different? Let's go over with what? The sole proprietor. The sole proprietor is also known as a one-man show. It is the number of owners is only 1. Limited liability. No, this is not, you are not protected from any liability because it goes over to your personal asset. What do you mean by that, Christopher? For example, you're running a restaurant and then somebody has a food poisoning or accident. This client of yours can go over, or the lawyer can go over with the personal assets that you have, not just your asset, but everybody. If you're married, they can go over with all your savings account. All of those are not protected because what? There is no barrier. There is no protection. And this happened here. One restaurant here in the valley that has a food poisoning, they were ordered to be shut down. And you don't have to worry about the client. What you have to worry is the lawyer, because they know if you're a sole proprietor, you are target for lawsuit. The more that they can get, the better. So what is the difference of a DBA and a sole proprietor? When you say DBA, it means doing business as, okay? So the DBA is a form required for you to file in the county level. But the DBA, it doesn't go through to the IRS, to the state. You don't have to apply that. You just have to go to the county. So there's a DBA form that you have to fill out on the county level. There's another DBA form that you have to fill out to the what? To the state level. Because this is just, you want to have some privacy on your name as a sole proprietor. If my name is Juan de la Cruz, I'm not going to use my name, but I would rather use ABC restaurant. So that is a DBA, doing business as. Okay, but they don't offer this any type of protection. There's still a limited, the liability is not limited. Is it a pass-through entity? Yes. When you say pass-through entity, you don't have to file a different tax return at the end of the year. You just have to put it on your 1040, either your Schedule C or Schedule F or Schedule E, then you will file one tax return at the end of the year. Of course, what are the benefits of this? This is a quick and inexpensive. You have the complete control. This is when I say, and I do my presentation, how do I describe? This is like the Nokia before. Like everybody used to have Nokia phone, but right now we are on an iPhone. Whatever business structure, this is already obsolete. On my opinion, based on our observation, if you see your business more than 8 years, this is not the type of structure that you need to be at. You will see later why. The challenges, the main challenge is what? Unlimited personal liability. Of course, like what I have said before, I'm not a lawyer, but I know how the law works. They can go all and dig deeper to all your savings account, your checking account, your personal assets, your car, all of those are not protected when you are running as a sole proprietor. Because when your business is growing, it's not just the asset is growing, but also the liability. Although there's a statute of protection in Texas that you have your house, they are protected, your car, but other than that, the personal liability goes all the way. That's why I don't really suggest this sole proprietor. Tax form, the Schedule C, if you have a restaurant, you could use a Schedule C 1040. For your PPP application, this is one common hot tamale. What are they looking? The bankers are looking for your Schedule C 1040. That is the take-home income, okay? After all the expenses, they're looking for your net income and able to determine how much PPP they will approve for your business. Now, the next one would be what? Partnership. The partnership is what? Also known as dynamic duo. The number of owners, 2 or more. Of course, the limited liability, you don't have any protection, which means any liability of your business partner could also be what? Imposed to the business. Vice versa. The pass-through entity, this you don't have to, the pass-through entity, this is not taxable on the business level, but on your personal tax return. The benefits, this is also quick and inexpensive, like you can do a handshake. You can do a handshake with your friend, whoever that you met, maybe in the networking. If I'm a restaurant owner, I could have, you know what, one of my clients are interested to be part of the business. We could just be a business partner. That's how easy a partnership business entity is, with no documentation, but that is the riskiest thing that you will ever do on your business, because you are going to share the profits and losses. The challenges, of course, you have shared liabilities. The tax forms that you need to submit, 1040 Schedule K1 of Form 1065, and also on the PPP application, the banker or lender will look onto the 1040 and Schedule K1 of Form 1065. The reason why there's a shared liability here is because it's 50-50. That's the reason why it's better you have a draft agreement. Okay, so this is what's happening. If my business partner, let's say, for example, she loans money towards that will be used to the business, whatever loan that is, you will be sharing that loan even the business will not succeed. And that is a common problem, especially if you develop this business partnership out of friendship. Okay, so don't use your friendship as a collateral to run a business. That's why my principle in running a company, it is better to build friendship out of business rather than to build business out of friendship. Don't mix your personal and business relationship, period. Now, the next type of company or business entity we're going to cover is limited liability company, or what you call this is the very common, and I love this limited liability company or the LLC, because they are the hybrid, also known as the hybrid structure. The number of owners, they are not called owners, they are called members. It could be consist of 1 or more members on the limited liability company, because using the word itself from owners to members already give you some sort of protection. Does it has a limited liability? Yes. Is it a pass-through entity? Yes. Okay, so you will not pay the business tax on a separate. This is passed through your personal return. What are the benefits? There are 3 main benefits, okay? Like what I've said, I'm not a lawyer, but we have experienced and encountered so many problems with limited liability company, with people that are not registering as a limited liability company. The limited liability company has three main benefits. What are those? Number one, name reservation. When you say name reservation, you will give on the state level, at least you are securing that name. If it's an ABC LLC, nobody has the right to use that name but you. On the state level, that gives you at least a peace of mind that you can operate without any conflict with the other name. Okay? If you're selling what, shoes, maybe it's Las Botas LLC, you can have that name. If you post it in social media, if you post it to your business card, whatever, you have that kind of peace of mind that you're the only one allowed, because anybody that used that name, you could contest and they have no authorization to use that name without your permit. That's number one. Number two, asset protection. This is what you're saying from the name itself, limited liability company. Asset protection, okay? But my question to you guys, being an LLC is not enough to protect your business. You still need to have what? What is the number one rule? You need to have insurance, whether it's a general liability, flood insurance, error and omission. All of this insurance would be the first barrier to protect your business. And second layer would be the limited liability company. Whatever assets and income, whatever liabilities stay on your limited liability company, it stays and it separates your personal income and personal savings and liabilities. Better you consult a lawyer how to set this, but registration, limited liability company, the basic, we could give you some guidelines. And number three, which is the most important thing, and this is where we at, this is our bread and butter, is tax flexibility. Why? Because any moment there could be a reclassification of income. When you are a limited liability company, eventually you could be an S corporation, or you can stay as a limited liability company. And that is why it offers more tax flexibility. And also for the purpose of application, other bankers and lenders, they feel more comfortable if you are an LLC. It means to say that you are organized, that you have paperwork to the state, they know that you are legitimate running the business. The only challenge here, and this is the most common where we step in, is there are more paperworks and reports. Because aside from the IRS, we still have to submit the report, like a franchise tax report, to the state in an annual basis. The franchise tax, which means this is what? The privilege tax for you to operate in the state. Okay, operational agreement should be there. Corporate paperworks should be always on your corporate records. The tax forms, if you are only a single member, you only have to submit a 1040. Now, if you have a member already, like another member, like 2 members or more, then you need to fill out, or you need to submit a business return called Form 1065 and distribute Schedule K1. If you are 2 members and you decided 50-50, therefore, the submission of the Form 1065 will come first before your 1040. The partnership return, the deadline of that this year was March 16. Okay, that's a big misconception. People assume I had this company that they are distributing rice here in the valley. They thought that they only going to accomplish 1040. No, that's wrong. You need to fill out the Form 1065 first, submit it on March 15 or 16, then submit your 1040 on or before July 15. That's how it works, not the other way around, because you have to distribute your earnings, your net earnings, through Schedule K1. If it's $100,000 and your net earnings is 50,000, 50% of 50,000 is 25,000 each. You have to report it on 1040 on your personal return. Now, if you are just by yourself, single member, but you want to be placed in payroll because you also have personal expenses and you never been paid with the company, then you just have to stay as a limited liability company, S Corp elected. 1120S is the tax return that you need to submit. And the deadline for this is also the same deadline for Form 1065, March 16. If you don't have did not submit here, if you know that you fall either partnership or S corp elect, you need to go back and check because you might be looking a penalty of not filing on time. Okay. Then the PPP application, this is what the lender is going to look at, the Schedule K1, the net earnings of Form 1065 or 1120S together with your 1040. Especially when you are already applying for the PPP forgiveness, which we are already been doing and preparing for our clients. I know it's after June 30, but the sooner that we prepare it, the better. Now, what is an S corporation? Like what we have mentioned a while ago, this is like a step up, also known as an LLC plus. The number of owners, it is only limited to less than 100 shareholders. Does it protect you? There's a limited liability protection. The answer is yes. It is not taxable, the business tax. It is taxable on the personal tax return. So it's a pass-through entity. What are the benefits? Whatever I have mentioned on the LLC, you have the same benefit. And there's no double taxation. And owners, this is the good thing here. Owners can receive a salary. The most common problem with businesses, they don't put themselves on payroll. You just withdraw money after money or owner's withdrawal. That's not the right way to do it. If you want to get more tax benefits, you put yourself on payroll. So anything that you pay to yourself, whether your monthly expenses, let's say personal, your salary, should be a reasonable compensation. If you're the manager of the company, how much is the manager ideally in Texas? Around $30,000 a year. You can pay yourself $30,000 a year on payroll rather than withdrawing money every now and then, because that is not business expense. But if you put yourself on payroll and you spend $30,000, $50,000 as a manager's salary, then that is part of the business expense. Can you imagine how much savings you can get by putting yourself on payroll? What are the challenges? It's the same, so much paperwork, same as LLC, reports to the state, reports to the IRS. No, also they don't allow non-resident shareholders. So if you are non-resident, you cannot be a shareholder of an S corporation. The tax forms, it's 1040 Schedule K1 of Form 1120S. For the PPP application, it's the same 1040 Schedule K1 of Form 1120S on top of your 941 reports and 940. That is for the S corporation. For the C corporation, also known, this is the big money makers. The number of owners can exceed more than 100 shareholders. And the good thing with foreign shareholders, you can have venture capitalists. The limited liability, it is a limited liability company. The pass-through entity, this is the problem. It's not a pass-through entity because there's a business tax and there's a personal tax here. What are the benefits? Same as S corporation. Owners for the benefits can receive salary and benefits, not just the salary, but they can also receive benefits. And the good thing about this, if you would like to be what? Facebook, if you would like to be Google someday, McDonald's, Coca-Cola, it can attract venture capitalists and going public. You could have your company sell stocks and shares. Okay, challenges. It's the same as LLC, more and more and more and more paperwork, and no non-resident shareholders. So for the C corp, now the thing here, you could have a non-resident shareholders. Okay. Then the tax forms 1040 Schedule K1, just non-resident shareholders. That is the benefit. The 10 tax forms is 1040. It's the same Schedule K1, but instead of Form 1120S, it's 1120. Okay, it's 1120. The PPP application, 1040 Schedule K1 of Form 1120. And the biggest challenge for this kind of corporate entity is what? That is the subject to double taxation. So you are paying taxes on the business level, which is how much? The business right now, the tax rate is what? 21%. And then after that, you have to pay personal tax also when you report your Schedule K1 to your 1040. So that is the main problem with a C corporation. That's why don't go here if you're not making millions of money yet. So here in the United States, if you will see, what is the biggest mistake? What is the biggest mistake of running the business when you stay as a sole proprietor? Why? Because when you are a sole proprietor, you are in the highest tax bracket ever. Here in the United States, under a study that has been conducted, the revenue, the green that you can see here, these are the net income. Okay, this is the take-home money of a sole proprietor, but the number of registered business type is up to this orange one. So if you can see here, they are only making combined. There are 23 million, almost 23 million registered as a sole proprietor, but the revenue is only 265 billion. If you're going to look on the other side of this bar graph, you would see that there are only less than 6 million or 5.8 million registered as corporation, but they're making almost a trillion. That is why what they're saying, there are so many income revenue that they're taking home because the structure itself give them so much tax benefits that they're almost making a trillion on the US economy. That's why they said that only 1% of the population controls more than 90% of the wealth. That is why if you would like to save as much and to get as much hard-earned money from your business, it all starts from your business structure. Okay? Don't pay so much tax. That's why when your accountant, tax professional, whoever are doing your taxes, always tell you, you need to make estimated tax payments. For me, they're not doing their job. Okay? That's just for me. They need to guide you and be more proactive. How can you park those money somewhere else? They need to tell you what to do with your hard-earned money aside just giving so much taxes, because you deserve it. You work hard for it, then therefore we will find ways to park your money somewhere else where you can benefit when you retire. So on this diagram, this is on the right side. This is like the airplane, okay? This is a diagram. All the sole proprietor, did you see this red? These red cubicles, these are the sole proprietor. They are very constricted against each other, which means there's so many taxes here, but here is the LLC, limited liability company. They started to fill more breathing room, like more tax room. And then here is the corporation where they have leg space, or what we call tax space. Because we can reclassify the income, you have limited liability protection, so you have those benefits as an S corporation. Now, my question, which one are you? Are you this one? Or are you this one? If you think you are this one, you're good. You're running your business smoothly because you're working on your business. But if you are this one, you're still doing your books, you're doing your payroll, your taxes, your menu, you run a restaurant, you do the grocery, you prepare the ingredients, you close the store, you clean the store, then you have to go back again and think, because life is not just working hard. Life is working smart. You need to delegate and elevate, especially in the art of taxation. There are more than 5,000 articles about the income tax. You don't have so much time to know all of those. Which one are you? Is this your books or this one? If this one, it's good. Okay, you're good to go. Because the PPP forgiveness, the lenders will look on this, okay? But if this is one, you are just writing everything on the piece of paper, that is not a business, okay? You're just guessing everything, estimating. This is not going to qualify for any type of forgiveness that you are applying from this point forward. So you have to think again. So our company, Wyco Tax, was established 2015. And we are an all year round, all-in-one tax payroll bookkeeping service solution. Why are we offering all year round, all-in-one? Because after tax season, that's where the bunch of IRS letters are coming in, not during tax season. Together with what? We started to offer a payroll bookkeeping service solution because, you know, the end product, enable for us to get tax shelter, we need to see the books, we need to see the payroll. But if you're doing payroll, somebody's doing bookkeeping, somebody's doing the taxes, it's taking so much of your time because you are the middleman of everything, where your focus is to run your business, your sales, your marketing, your product, your promotion. You don't have time to check the numbers on payroll, to check the numbers on your books and give it to your tax preparer or to give it to your accountant. That's why we in-house everything, the tax, payroll, bookkeeping, because they are all coincide and they affect each other, whether you're capable of the loan, what is your debt equity ratio, those all reports, the payroll and bookkeeping reports are what matters for us to apply the loan and also to give you tax deductions, benefits, and credits. We are also resolving audits. We have a combined 20 years experience of handling IRS and even payroll audits to the state. You go to WICO Tax. Why? Because we are a worry-free. We stand by our name, worry-free, year-round, competitive, and on-time tax payroll bookkeeping service solution. We have QuickBooks Certification, and we resolve more than $321,000 of audit. Just follow us before you even call us. Please check WICO Tax on our website, on Google. Check our reviews and our publications. We have different channel 4, channel 5, and even newspapers in the Valley, RGB. Just check us before you call us, okay? We have the highest rated reviews online, 707. We don't pay for any type of advertisement just to get reviews. We get organic reviews from our existing clients. This is our success stories from COVID-19 relief, tax, any type of services that we're offering, payroll and bookkeeping. We have it. Just read it there. Okay. We don't only cater English, but we are more Spanish. As a matter of fact, I'm the only English. I'm the only person that doesn't speak Spanish really well. Okay. So now, if you would like to stay, our next presentation would be Spanish at 11 in the morning today. Then this webinar that I presented, you could watch it on our YouTube. Just type WICO Tax. And if you want to download the PDF, go to our WICO Tax website. For the 15 participants, like what I've said, you will get a tax workshop certificate and free 1-hour tax payroll bookkeeping strategy. Next, tomorrow, we will have a Thursday live chat on how to access the 48 million Texas business funds. I will be co-hosted by Dr. Barbara. 10 in the morning. This is only less than 15 minutes, hopefully, if there are no more questions. And for next Wednesday, we will talk about what are the 10 most common taxable income presented in 10, and English 10 in the morning, and Spanish at 11. This is our YouTube channel or website. You can see here. And if you're still uncertain about your COVID-19 relief, we can help you to clean up your books and file your taxes on time. July 15th is the deadline. All right, thank you for watching the White Coffee Break, because just like you, of course, your tax needs a break. Questions? We will go now to questions. If there are no questions, let me see. For those of you who have questions, either with this presentation, feel free to email us. Thank you for watching. And guys, hopefully, if you like this presentation, follow us or give us a like and subscribe on our channel on YouTube. So thank you for watching. Hopefully, you have a good day ahead and stay safe. Goodbye.